Hi guys, welcome back to Financing as a Freelancer. Today we're going to talk about planning for business expenses. In particular, we're going to go through why you even care about business expenses in the first place. Why is it worth the hassle? What qualifies as business expenses? How do your business expenses potentially affect what you can and should charge a client? And then given all that, how do you go about tracking all these business expenses so that you can minimize the amount of administrative time you spend on tracking them while also reaping the benefits and taking advantage of business expenses? So we're going to start off with why you care about business expenses. And to begin, we're going to go back to the basic flow diagram from our second session on the basic finances of freelancing. So you might remember as a freelancer that you are treated as both the employee and the business. As we went through in our second session, what that means is once you take in certain revenue from your freelancing business, you pay off certain expenses, and then the remaining portion is treated as income, and you're required to pay both income tax as well as double the healthcare tax on that income. So the key portion to point out here is that you're only paying income tax and healthcare tax on the total revenue after you subtract out the amount of expenses. So let's put some numbers on this. If you made, say, $100,000 a year in revenue, and you spent $20,000 a year on expenses between all your, travel and whatever, you are only getting taxed the income tax and your healthcare tax on the $80,000, i.e., $100,000 minus your $20,000 of expenses. This is really useful because by keeping track of your expenses and making sure you're appropriately accounting for all of your expenses, you are minimizing the amount of money that is treated as income, which therefore minimizes the amount of taxes you can pay. Now, obviously, you can't qualify everything you spend in your life as an expense, right? If you go out and get a donut or a drink with some friends, you can't qualify that as a business expense. But by qualifying legitimate business expenses and keeping track of them, you can make sure that you are accurately only getting taxed on the amount of money that is your revenue minus everything you spent to keep your business up and running, and that minimizes the amount of taxes that you need to pay to the IRS. So this is why we care about keeping track of business expenses. If we don't keep track of them properly, then we're going to be taxed on all of our revenue, and that's a lot more tax than if you were to keep track of your expenses and then be able to subtract that out of your revenue and only get taxed on the remainder of your income. Remember, as we talk about taxes, that the more money you make, your tax rate goes up. So sometimes by keeping track of your expenses properly, you can even drop yourself into a lower tax bracket, which means your income taxes go down significantly. And this is why tracking business expenses is so important for freelancers, because you're spending some of your money on personal things, which you can't qualify as business expenses, but some of the stuff you are spending is on a business expense, and so you want to keep track of personal expenses versus business expenses. Cool. So now that we've gone through why we care about business expenses, let's talk about what you can even count as a business expense. In order to do this, I'm going to go to the IRS form called the Schedule C. So Schedule C is something you will fill out whenever you are a sole proprietor, which is the type of business that most freelancers are. If you need a review on what a sole proprietor is, please revisit my video number 2 on the basic finances of freelancing and what it means to be a sole proprietor. So every year you fill out your taxes. If you use TurboTax or you have an accountant that does it for you, you will have to fill out this form on your taxes, which shows the profit or loss from your sole proprietorship business. I'm showing you the version for 2020 because that's when I'm recording this video. But if you want the most up-to-date version of your Schedule C, just Google Schedule C and the IRS website will be one of the first things that comes up. The portion of this that I want to focus on here is part 2, expenses. Listed here on the Schedule C is every single type of expense that you are legally allowed to qualify as a business expense, which is really wonderful. So there's a couple things I want to point out here because typically the things you can qualify as a business expense cast a much wider net than people intuitively think of as business expenses. For example, note up here, enter expense for business use of your home only on line 30. So if you look at line 30, you'll notice the IRS is allowing you to qualify some percentage of your home as a business expense if you are using your home for your business. So for example, in my case, I have an extra room at my apartment in Brooklyn that we keep empty and that I use to choreograph. So that square footage can be qualified as a business expense because we're only paying for that so that I have space to choreograph while we're quarantined at home during COVID. And so you can qualify that as a business expense because that percentage of your home is effectively rent for a business space. And that can qualify as a business expense, which is something a lot of people don't think about. There's a lot of other things here. So travel and meals. You'll notice that your meals while you are traveling are something that can be deducted. Technically, it's only 50% of your meals, but we'll dive into the details at some time in the future. Any repairs and maintenance, any depreciation on any of your assets, anything you pay anybody. So if you pay an accountant, you pay a tax lawyer, you pay a marketer, all of that. If you're driving a car to get to the studio that you teach at or to go meet with clients or whatever, the car depreciation as well as the mileage that you drive is deductible. There's a lot of stuff in here that's deductible, which is really important. If you're a dancer and you're renting studio space, if you're spending money on a website, all of those things here are deductible. So obviously, for this to be useful for you, you have to be able to keep track during the year of all the things that you are spending on your business and what category they fall into. You can't just go to the IRS and say, hey, this year I spent $15,000 of expenses on my business. Trust me. They're going to ask you to break it down into, okay, how much did you spend on advertising? How much did you spend on depreciation? So on and so forth. And at the end of this form, on line 31, they're essentially going to say, take all of your income and subtract out all of your expenses. That is the money that we're going to tax you on. So again, this is why keeping track of your expenses is extremely important. If you've never kept track of your expenses to this level of detail before, I highly suggest taking some time with the Schedule C form. Just Google it and look for it. And really ask yourself what things that you spend on in each of this category and make a list for yourself so that you can track those because each business is always slightly different. So this is how you always know what expense you can qualify for your business. This mostly stays the same, but occasionally year to year changes. So always make sure every tax season that you take a peek at the latest Schedule C form to make sure you're up to date with any changes. Cool. So this is what counts as a business expense. Next, we're going to talk about how business expenses affect what you charge a client. So general business expenses, as we talked about before in our previous setting rates video, that are just for your business as a total, are your overhead costs. So for example, if you're thinking about the business expense of the portion of rent that is for your home business, any of those overhead costs should factor into this portion of your rate setting chart, which means the more you spend on overhead expenses, that'll increase your rate that you charge a client. So let's say you upgrade to a fancier apartment and so you have a nicer or bigger room for your home office. That should mean that your overhead cost goes up, which means that the rates that you charge your client goes up. The other way these expenses work their way in is you should add any expenses specific to a client on top of this rate. So for example, this $215 an hour, based off of this calculation that I should be charging a client, or sorry, $215 per class, is only for the class time. This does not include, say, the flight I have to take to travel if I'm traveling to the client by flight. It does not include the hotel if I have to stay at a hotel. It does not include the cost of my transportation to the airport, anything like that, my meals. None of that is included in this rate. So any expenses that you are undergoing specifically for that client should be added on top of your rate so that you're charging the client the class rate plus any additional expenses you are spending explicitly for that client. Again, just general overhead expenses work your way naturally into the rate through this portion of the formula, but expenses you're spending specifically for that client should be added onto your rate. So that, depending on, the further I travel for a client, my class rate stays the same, but the amount they pay goes up because the flight is more expensive or my opportunity cost might go up or something like that. So that's how business expenses factor into what you charge a client. And now last but certainly not least, how do you keep track of business expenses? Right? There's so many different categories here. And in every given year, you're probably going through hundreds, if not thousands of different transactions for your business, right? You might be paying for business cards and studio space. In my case, I pay for costumes for my dancers. I pay for flights for my dancers, all sorts of stuff. And so how do you keep track of all this? My recommendation here is to have 2 different credit cards. So I have the 2 credit card system. I have 2 different American Express credit cards. I have a blue card, which I use for personal expenses. So that's, when I'm paying for dinner for myself or whatever, I use a blue card. and I have a gold card that I use for business expenses. So let's say one of my dancers wants to talk about something after rehearsal, and so I say, here, let's go grab a cup of coffee together and let's chat. Then I'll put that coffee as a business expense on my gold card because I'm paying for coffee so that we can have, a meeting. I can have a meeting with one of my dancers, or all the flights that I pay, or anything. All of that I put on my American Express gold card. The reason for that is at the end of the year, all I have to do is look at all of the transactions on my gold card for the whole year, and I know what my total expenses are in a matter of minutes, rather than keeping track of receipts and keeping an Excel spreadsheet and none of that. The other amazing thing about American Express, and a lot of credit card companies do this nowadays, is that they will automatically categorize your expenses for you. So I can export a chart from American Express that effectively divides all my expenses from my gold card into pretty much these categories. It's not quite the exact same as these categories, but it is very close. And so with about an hour of extra work at the end of the year, you can export all of your expenses, you can match them into all these categories, and filling out this form becomes a piece of cake. That's really useful because then you're taking advantage of all of your expenses without spending a bunch of time saving receipts and putting them in an envelope and adding them up every week or whatever. Just you get yourself a separate credit card, which usually doesn't cost you any extra money, and use that credit card only for your tax deductible expenses. And then make sure that at the end of the year, you're using a credit card company that is able to categorize the expenses for you. It makes your life super duper easy, and that way you can keep track of all these expenses and all these categories without spending a ton of time and taking a lot of time away from actually generating income. So that is the short version of how to keep track of your business expenses. The last thing I want to bring up here is as you go through this process for a few years, you will get used to the patterns of what your expenses are. You have a good idea of, hey, for each client, I typically have X dollars in variable expenses specific for that client. And then I have X amount of money that I spend in overhead expenses every year. And that'll mean that each year your expenses start to get fairly predictable. I'm at the point now where before I even look at my American Express statement, I can estimate within about 10% of what my business expenses are going to be, and I'm very, very rarely wrong. And that means this allows you to understand how much money you're going to be able to pay yourself in a year, which means you'll start to have the stability that you're looking for out of your freelancing. As we talked about in our first and our third video, one of the cons to being a freelancer is there's a lot of volatility with not knowing how much money you're going to make and not knowing how much expenses there are going to be. And so by being able to predict your expenses and predict your revenue, that'll give you the stability you're looking for out of your freelance business. And that's why this tracking is so critical, so that every year you can see if your expenses are going up, you can figure out why they're going up, and that can help you figure out what your expenses are going to be in the next year before the year even starts. Hopefully that makes sense. I will see you next time for some ideas on how to save for retirement when you're a freelancer. Thanks so much.